Hello Cryptonia, Mike here with Repliquants and another market update on cryptocurrencies. Scare the Children edition. So yeah, things got ugly overnight, as you can tell. We're right here looking at the Bitcoin USD chart, and lo and behold, I did promise you a correction, but apparently I wasn't kidding. Huh? This got ugly in a jiffy. So. See, my drawing tool now works. So yeah, this of course is ugly. A drop all the way to 40,000 is scary as hell, especially if we just were at 52,000. And what does it mean? Where do we go from here? And I wanted to provide you guys with a little bit more comprehensive update on where we are and what the indicators are saying, and kind of go through everything one more time. This might be a little bit more lengthy than yesterday, but you know, definitely a good time to do it because it looks scary, and a lot of people are probably going to be scratching their head and saying, oh, you know, what's going on here? Why we're dropping so far? Look, the first thing I would kind of like to pass along is to ignore the news, because people write me all the time. Have you heard of this? Oh, regulations are coming. Yeah, we all knew regulations were coming, but I don't think anyone. You guys who are trading Cryptonaissance, or anyone who's trading crypto or has bought crypto years ago, or maybe just a year ago or a few months ago, had no illusions about the fact that the crypto market is going to be regulated at some point, or at least there will be attempts made to regulate this market. It's just a low-hanging fruit. It's something that I guess is almost inevitable, and it's a fight that we'll have to fight. I mean, I'm not trying to come across as being ideological here in any way or any fashion. No, it's just something that I always expected, and it's something we're going to have to pass through. So, you know, the whole China thing, moving the miners abroad because of, well, China being China. Oh, there goes the other market. And, you know, of course, the US and many other countries, but of course, there's a lot of good news to report as well, like San Salvador, you know, the savior in English. Good name for this country. And I think other countries are considering it as well. Was it Ukraine? I'm not sure. There's so much going on. And MicroStrategy buying another, I think, 450 or 500 coins. So a lot of good news happening. Of course, human psychology is always to respond to bad news, right? Good news sometimes hype the price and push the price, doing a bull leg. But when things are still being sorted out, like we had here, right? There, right? So like where we go, you know, hemming and hawing. Are we going to go here, going to go up here, or we're going to go down one more time? And obviously, what happened? We're retesting, and I kind of expected a drop to here. And I think that's what we got. I think that's what I actually highlighted yesterday, right? A drop to around here yesterday. And unfortunately, I was proven right. Well, fortunately, however, it bounced right back up. Oh, I just moved this. Let me just try this again. Yeah. So fortunately, it snapped right back up. And that is usually a good formation. And what usually follows after a snapback like that is something like this. This is a very, very common theme, by the way. Very common theme. When I was working with Scott back in the days on Ivan's candle patterns, you know, Ivan Creston's. And this is very much a textbook pattern of a retest variation long entry, where you would basically, let me see here, you would either go along here, but most likely you would go along here. Let me do this again. Sorry about that. Let me zoom in a little bit here. So yeah, because I can actually see something. So, you know, candle up, candle down, candle up again. A lot of times you would go long, pardon me, figuring this stuff out here. Go along here, or if you don't go along here, if you wait for the second one, which as a discretionary trader you might do that, you would go along here, and then of course you would put the stop right here, below this. As a systemic trader, right? Not in crypto. Stops really obviously don't work very well with crypto, because when things slide quickly, you know, case in point right here, or here. So that's where you would go long. Then it would be a retest invariably. The strongest signal usually is something like, since we're talking price patterns, something like this right here. I was on Reddit the other day and somebody says, sorry, posted a thread there saying, titled something about technical analysis doesn't work. And the proof that person provided was the golden cross, which has been dispelled as a myth so many times. I mean, I've often heard an evil speculator back in the days when it comes to trading just regular stocks. The golden cross is coming. I'm like, oh yeah, sure, yeah. Break me up when something interesting happens. The death cross, tea leaves reading. The stars are aligning in a certain way. The moon cycles. It's all BS. Okay, but technical analysis, like price patterns, they work pretty well. We use them all the time, and they've been incorporated in many, many systems. You'd be surprised. Trending patterns that are being used by institutional trader, even by quant traders. So their work, just use the right, proper, proven techniques, and so as opposed to like some exotic candle pattern that somebody says, okay, the spinning top has an edge in certain scenarios. There's actually statistics on these things, right? I think patternsites.com, if you want to look these things up. I'm not really a pattern trader. I don't, but there's some, especially because I've checked the site and the statistics were very, very sobering. What I do though, I do believe in price patterns and formations like that, which is a completely different beast, because it's a lot less lagging and it tells you a lot about what the market does, how it feels, what it thinks, right, and what it had for breakfast. So anyway, a drop like that and a snapback, that's usually a good sign, because it tells us that most likely the whales are buying down here. And had I been up last night, then I would have probably bought at 40 as well. But I wake up this morning, and quite honestly, guys, I don't check my account very often. I'm not like online checking my account every 3 minutes. Tonight, a good friend of the blog and also over at Big Ones, and he's also an affiliate because he really believes it and he trades the system and trades crypto in general. He writes me and saying, I check crypto and it looks bad, and it's like, why are you even checking the account so often, like 3 times a day, 4 times a day, probably more often, right? I check my account twice a week when honestly, I've got a lot to do and I don't check my account so often. Because why, right? Unless, of course, something ugly happens like this and I have to talk about it, because, keep you guys on the ball and ahead of the tape. So anyway, going back to this, charts. So if this gets uglier, and I'm going to make this very clear here, if we're breaching through 40,000, there's a very good chance, well, actually, it's almost baked in, we would go here, okay, to somewhere around, what is that, 30, a little bit higher than that, it's not really perfectly lined, 37,000, something like that, okay? And if that would break, we would go all the way down to 30,000 again, which I think there would be extremely good support on here. I don't think it's going to come that far, but there's no guarantees, because anything can happen. If you're really going back in history, well, I don't even have to go back so far. We could be somewhere, here. That's possible. Bouncing around here for a little bit longer, dip down, retest again. Could happen. The same formation that you see here, right? It could form here, right? Like we could do this for a while as well. There's several scenarios. And there's no crystal ball, guys. There isn't that. There's none. The only way to really get your bearings is to kind of go with the flow. But what I mean by that is to look at the price patterns and as they unfold. So what happens after this? What happens after this? But to decide in order, okay, where are we? Are we here? Right? Oh, are we here? Right? Where it kind of maybe droops down, or are we? I don't know. Could find something comparable here in this mess of candles. Can I scroll? Yeah, I can. Right. Or are we here? That's a good one. See, we could be here right now, and it's doing another dip down, and then works its way up, and then finally, what you do is usually look for price confirmation. Let me try to check on this. What I mean by that is you set up thresholds, and then it doesn't take a PhD in in market, in technical analysis to do these kind of things. I mean, it's quite simple. Boom, right here, 40,000. That's the bearish inflection point. Oh, okay. Oh, it actually stays on the screen. I didn't know that. I'm still figuring this drawing tool out, which is actually really cool. And boom, right here, what is that? 48.5 or 49,000? I think it's 49,000. These are the two inflection points because I don't know how to change colors. Let me try if I can do this. And I'm back. I lost you guys. Somehow I got cut off. I pressed the wrong thing, whatever. In the meantime, I changed the color. So now we got red. Looks much better, right? Anyway, so we're talking about the spike low that has formed here. There's quite a snapback and it establishes basically this inflection point here around 40,000, okay? I wish I'd have bought that, but I was sleeping. I need my beauty sleep, obviously, right? And so we have two inflection points here now. It's around 53,000 is the previous one, when things kind of took a turn to the dark side. And what this establishes basically is like this zigzag, right? What they call a series of lower highs and lower lows, right? So we have highs here and we have lows. This is a pretty common phenomenon we see in price action. I see one here. See here it was an attempt to breach this series here. And it looked very promising, but then it dropped back down, scared everyone for a little bit longer, and boom, right? And now here we had this climbing series of higher highs and higher lows. Right, so a higher high and a higher low and a higher high and another higher low. Right? See how that goes? Not that complicated, right? And so what this does in a way, it sets up a threat and an opportunity because, okay, so if you consider this one here as our medium term, and this is the more short term, and this is more the medium term inflection point up here. For the bullish side, right? Like the bull, right, is waiting for us right here. That's as good as it gets, guys, for drawing with the mouse. And then I don't really know how to draw a bear, but I just think of Tim Knight, and then that's pretty good. It's smiling. Give him some teeth. All right, okay, enough fun. So, but you're getting what I'm saying, right? We've got two inflection points, one down here and one up here, and it's very important that we hold this inflection point here, because if we drop through here, we're definitely going probably, 38, yeah, for sure, but most likely we're going retesting this level here, right? 30,000. And if we, however, breach through 53,000, then, we're pretty much, most likely we would see something like this, like a sideways, blah, blah, test, breach here, that's first. Then it might do actually a retest, and then it goes up, same retest, and so on. That's kind of how it works its way up, right? It kind of starts retesting the previous inflection zones. This is obviously a congestion zone here, where if we get this far, we're going to get stuck for a while. Can you see anything? So in terms of, where we are, let's scroll back a little bit more here. Okay, I think this is good. The question is, where are we right now? Are we in something like this? Where we did this and then kind of screw around for quite a long time, maybe skirted children for a little bit longer, and then eventually kind of bottom out, and I've got this zone here that we set up. Or are we going to let's go back, do something like this, so we didn't have to look very far? This is price action 101, more or less. We're doing this the high, boom, 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 right? Then we might be here right now. Yeah, that's very possible. One more retest, which I wouldn't rule out, by the way. Very much possible that we're going back to 30, 40, down one more time, around near 40,000. Spike up again, scatter shoulder a bit more, and work a safe higher in a series. When it really takes off. So that's a pattern that you see many times in price action, and it's something where way back when I was working with Scott on the implementing the Crazy Ivan pattern, we called this something like this here. No, actually, let me go back. This right here is like textbook, right? Like a price, like a retest variation long, where we have basically the major spike high here, and then we here, right? So this is kind of like right here is where you would go long, right? Like on a breach of this candle, for instance, or if you missed out, you might actually take this one right here, right? This breach right here. Sometimes there's retest in between. That's why you're setting the stop right here. So that's a retest variation, long pattern that we defined. So I believe more in price patterns than I do in candle patterns. If you ever looked up the price pattern side, I forgot what the guy's name is, but he did a lot of good work on collecting statistics on single and also I think dual and triple candle patterns. And once you see the stats, you can see that they have very low odds. But this kind of stuff is pretty standard, right? It's been used for a long time and it does work, and that's why usually what I look at. The EMAs here we only use for Bitcoin versus Ethereum. When I look at this, I'm sorry, the other way, Ethereum, Bitcoin. Right, so we just want to know which season we are in. We might actually replace that with a series of 20 or 30 candles where we say, okay, is this candle, for instance, right here, if this candle, is it low? If you go back, let's say 20 candles, is it lower or higher? Right? Let's say this is the 20th one. Well, it's lower, so we're staying in Bitcoin. If it's higher, then we stay in Ethereum, right? Well, it would be higher than this one in this case because we're stepping forward. If it makes any sense, it's less of an abstraction and it serves the same function. So that's what we're considering doing now. But if we're looking, for instance, at Ethereum USD, similar pattern right here, which is positive, right? It's actually a little bit more positive than Bitcoin. We've seen that, Bitcoin Ethereum seems to be a little bit stronger right now than Bitcoin, and that's indicative of, that's actually pretty good because Ethereum usually leading ahead is not unusual. We have to see what the altcoins are doing as well. So we're zooming in here. Some of the leaders they're dropping again a little bit today. But if they can pick up and lead the pack higher, then that would be a very good sign. So, it's very premature. We can't really make a good determination yet of what's going to happen here. If we see a retest of the lows, this is for the inflection point. If it then bounces higher and actually, works its way higher and breaches the highs here, that spike high here, right? And admittedly, we're quite far away from that right now. But if he does that, we're in really good shape because that would be a really good formation. It might be another retest, which sets up almost like a, one of those guys here, inverse head and shoulder. Sorry for that. I know it's a little bit antiquated, but these things actually work pretty well. And so anyway, this is what we're looking for. We don't know where we are yet. This is going to take some time to work out, and but we need to see more price action. There's basically two possibilities right now. There's the threat of low, this working itself way lower, or this was just like a quick swipe lower and we're coming back up here into this congestion zone where we then will kind of stabilize and then work our way higher. Okay, that's the favorite scenario, of course. Okay, so let's look at what's going on with Glassnode, which is a firm service that does statistics, quant analysis on the blockchain and gives us insights into what the crypto market is doing, what it's thinking, how it's operating. There's all kinds of hints that we can glean, right, in terms of sentiment, in terms of the activity, in terms of the value proposition versus, let's say the price of a transaction versus the price of Bitcoin, which kind of resembles the PE ratio, proposition of a stock. So they're doing similar things on Bitcoin or Ethereum. And so there's a lot of positive things happening in Bitcoin right now. So this is going to lower the transaction cost in comparison to the value of Bitcoin, right? Which by all intents and purposes is still very high, right? If we zoom out into this chart, let's go back here real quick and go into Bitcoin. And yeah, this looks pretty scary, but if you're looking at this at the whole picture, right? I mean, look where we are. I mean, it's see, and it's just, this is not a log. This is, if you look at a log chart, which is really what you should look at, right? A log chart, because then you get a more clearer picture of how this gets traded, and that's really how you look at charts. Why? Because look, something that trades at $50 or $500 is a very different beast than an instrument that trades at 50,000. Okay, it's like stocks, the same thing. You can compare. So it's all relative. It's on a relative basis. This is where we are right now. Okay, so if you switching out of log, this looks pretty scary, but in the log context, look where we are. I mean, it's a correction, but it's not horrible. And it's still part of this ongoing, longer term trend, and we've gone through that, right? Also has to do with the, the blockchain and the, the intervals at which the rewards get halved again. I think I don't know. I forgot how many transactions are for that. 64,000 or something like that. I forgot. A million. I honestly forgot, but it's all related to this, and the value proposition keeps increasing, and that's really what we mostly care about when it comes to that type of data. Like, for instance, here we're looking at NUPL, net unrealized profit loss. So basically what this is, right, if you're looking at what is unrealized profit, right? Let's talk about that first. Unrealized profit is profit that you haven't unrealized yet. So let's say you're buying a painting by some up and coming artist, or you're buying, I don't know. Just let's go old fashioned. That's using, a painting or a car or something like that, and you collector's car, and you're paying, let's say, $50,000, and then you're holding it for a while. Well, it might be worth 100,000 now, but you haven't really. It's theoretical because you haven't really realized that loss or win yet. So if it's a win, 50,000 you made or something, that's unrealized. It's unrealized profit. And if it's a loss, well, as the old saying goes, no loss unless I sell it, which always cracks me up when I see that on Reddit, right? I say a lot about Bitcoin. I mean, I have a point in some respect if they have a really long-term perspective, but it's kind of academic. But basically, net unrealized profit loss is basically the difference between unrealized profit, okay, and a relative unrealized loss. Okay, it's pretty simple. This is basically very similar to calculating by subtracting, the similar form is subtracting the realized cap from market cap. So realized capitalization, or realized cap, that's really a variation of market capitalization, right? That values each UTXO, which is an unspent transaction token, based on the price when it was last moved. So what does that mean? You're buying something and you're getting some cash back. That's very common with Bitcoin or Ethereum. Actually, not with Ethereum. Ethereum is in fractional intervals, but with Bitcoin, you make a payment and you're getting Bitcoin back. That's basically UTXO, right? Or if a coin is just being created, that's also the value right now. That's its first used value, right? And that's the first valuation that it's got, right? When at creation point. So where were we? So we're talking about market. I made some notes here. We're talking about realized capitalization, right, versus market capitalization. So in terms of market capitalization, as it presents the total network value of the entire Bitcoin network. So if you count all the Bitcoin in existence, right, off the chain, on the chain, you count it all together, and you at the current value, what is it worth? That's a total market capitalization. So if you subtract the realized capitalization of if all the coins, right, and subtract it from the market cap, then you're getting this net unrealized profit loss, if that makes any sense, right? So it's really a matter of looking at the market and saying, okay, on average, the people who are holding Bitcoin, are they sitting on a loss or sitting on a win, right, on a profit? And so what we're seeing here, let me zoom out a little bit actually. So as a comparison, while we're using this for Cryptonaissance, we're using this on a long-term basis because we determined that up here, when things go really into a euphoria mode, that's usually when it starts dipping back below, right? That's usually a good time to get out of the market. Now you can tell that what happened last time here, when we entered the last, just go forward again, we were close, and we were actually waiting for this to pop over and then drop below, but it didn't. And so based on that, we thought that we're probably somewhere here. Of course, the correction we've gotten ever since is a little bit deeper. But, I'm telling you, this correction felt pretty deep too at that point. And so we'll see. And so did this here, right? But of course, here we weren't this high. So it's kind of this edge case where we're like, we're going to shift this over for this one occurrence. I don't think so. We might look at other measures, right? Because sometimes trying to shoehorn one particular measure into what you're trying to determine, right, is not really the right approach. What you want to do is find correlating evidence, right, that works, because you want to always stick with the clear signals, when it comes to trading, with clear signals that really are very clearly defined and where you don't really have to shift them around or shift the parameters around all of a sudden to here or something. And then, you might capture a few more, but is it really what you want? Now, maybe this is your long-term signal and you have other signals for the more short-term side, right? Makes sense? So, but anyway, that's what Glassnode and these types of indicators, that gives a lot of intelligence, a lot of quant analysis about the the internals of what makes up the blockchain, of course, and by extension Bitcoin, and in this case, right, with Bitcoin here, and it tells us a lot what's going on in terms of sentiment and per the activity and also the profit loss ratios, profit loss equations that we get here, right, by subtracting the realized capitalization versus from the total market capitalization. I hope I explained that well. Otherwise, look it up. It's very well explained online, but I just kind of wanted to summarize it a little bit for you guys. So here's a similar thing. That's actually the one, and let me zoom out here. That's actually the one we're using for Ethereum. It's the short-term holder and UPL. So it's again net unrealized profit loss, right? So it's again difference between relative unrealized profit versus relative unrealized loss. Okay, and it's a short-term version, so it's actually based on they're only counting 155 days. Why 155 days? Because per statistics, and it's commonly agreed upon, if something stays off the chain for 155 days, not being moved, not being touched, it has a tendency, a high statistical probability, right? If you search like a p-value, right, to remain on the domain off the chain for much longer, maybe sometimes years. Okay, so that picked that number. They might have picked 160 or 150, doesn't matter, it's 155 days, that's what they're going with. So here the thresholds are a little bit different, and we're using that to basically to determine whether or not we're in Ethereum, Bitcoin mode, which is the two basic modes, Ethereum, Bitcoin, or if we're in alt season. So this is really a flag of whether or not we're in alt season or not. And we have certain thresholds here we've discussed in the past, and where we're going, up here will be basically 0.25 where we go long, and then when you drop below here, we're going out of Ethereum, out of altcoin season, and actually going to cash. We weren't anywhere close last time here near the highs, so there was no occasion at all to get out of altcoin season, if that makes any sense. So when we actually got caught off last time during the, sometime in May, there we go, we're around here now, that we weren't anywhere close to being cut off out of alt season. We're just basically, we did a correction and we're in the middle of altcoin season, which is probably what we should expect as well in the future, because it's kind of when you really get in a mania phase, right, in doing altcoin season, and then you either get kicked out altogether of the system or not, right? So normally the sequence of events would happen, if you start from cash from the last bull market, and then you want, my iPad keeps talking to me, I don't know why, and then you you in cash, and then you end up in Ethereum or Bitcoin, and then you switch into altcoin season, and then you basically get into the mania phase. Everyone makes money hand over fist, and then boom, that's when you really get the mania phase, and that's when you get you cash out of the market, walk away, wait a year or so, and then go back in. So that's kind of the general idea of the system, as you remember. And I don't see anything here that's of interest, to be honest. I mean, we're lower here, which is good, because that means sentiment is lower, and that gives more opportunity for us to pop back up here. And the more we bottom out here, the better, in my mind, in terms of doing the correction. So for what we have corrected, we've actually come quite deep. We've gone to right here already. And last time we actually corrected over here back in 2020. We corrected a lot deeper last time in comparison. So next, that's very simple. Big number of addresses with balances above 1,000 coins, right? 1,000 Bitcoin, not $1,000. So the whales, basically, right? This talks about the whales, and right, it's been dropping actually. There's less and less of them. Is that necessarily a bearish sign? No, there is accumulation happening. Maybe there's more. It's more. When you talk about market breadth, it's a similar concept. How many? It's like, okay. I'm going to talk a little bit about this a little bit later, but you've got different distribution. I mean, how many people are holding? How many people are holding? See, here's a lot of people who are holding maybe like $5,000 worth, right? And then here's people holding millions and millions dollars worth of, and here's down here people holding like maybe $50 worth, right? So it's probably not that many either. So most people are in between here. It's probably very highly concentrated, right? It's really a lot of, it's leptokurtic, right? This distribution here, and kurtosis. Look it up, and it's so maybe we're shifting over a little bit, right? Where this becomes a little bit more normalized, more like platykurtic here. More people are holding, I don't know, $15,000, $20,000 worth. It's probably less than that, but I'm just kind of throwing examples out. So this is not necessarily bearish, but I'm keeping an eye on it. It's just out of interest. What else? Percent balance on exchanges. Now that is really interesting, and let's talk about that. So basically, the exchanges they collect statistics, and when I saw, as you can tell here, see what happened when all of a sudden Bitcoin was drained from the exchanges, right? I don't know if this is market manipulation or if there's some other mechanism behind it. Honestly, I freaking don't know. I mean, Scott thinks it's market manipulation. I'm not sure. Could be just maybe because the market is also getting wider, and maybe people are finding alternative ways, or maybe they're pulling it out because they don't trust the exchanges to hold it longer term. It could be all kinds of factors involved. So, but it's dropping, and I find that very interesting. What it does, though, it does put pressure on the exchanges for trading. So that's indisputable, right? Because if there's less Bitcoin to be had, it's market, supply and demand, right? I mean, I need another example. I've got my albino here already. So, example, right now, for instance, I'm getting into electric unicycles, EUCs, right? They're cool. I've always been an e-skateboarder. I love these things. And when I'm moving to a new place and all that stuff in the country, I want to get an EUC because it's really cool, right? You can just cross-roll around, off-roading, go crazy. If my old bones sustain it, we'll see. But so when I get these things, you can get anywhere. The vendors are sold out, especially here in Spain. You call them up, they don't want to talk to you. I've looked all over Europe. I actually found 2 today, which I ordered in Germany from all places. So, but it was like mission impossible, to be honest. So it's supply and demand, right? The prices go up everywhere, of course. There's a premium on it. They give you all kind of bullshit reasons. It's the shipping cost and all that. Maybe, but no, prices are jumping. And it's like the chip shortage. I mean, I don't have to tell you guys, right? Try to find a freaking graphic card right now, right? NVIDIA or something. And it's freaking mission impossible. Other hobby I have is FPV, flying my drones, and I put drones together and build them. And you can't find parts. And prices are jumping. Same thing. I mean, I gotta find a cheaper hobby, like maybe collecting stamps or something. So I picked the wrong hobbies, I guess. But just to make the point about supply and demand, it's the same here, same with Bitcoin. You pull things off the exchanges, become available, less available, there's less bids, right? I mean, look at it this way, right? If there's less coins being traded actively, well, there's less volume, less bids happening, more competitive bids, in relation, because I mean, this is relational, this is not just linear line up, this is relational in terms of the percent balance, okay? This is not number of coins, this is percent balances, So anyway, moving on. Okay, percent of UTXOs in profit on unused transaction output, right? Unspent transaction output, UTXOs. And so it's basically when you get cash back. It doesn't work that way in Ethereum, works like that in Bitcoin. And see, well, here is something. See, magic is only for Bitcoin. I was sweating there for a second. Am I wrong? No, it's only available for Bitcoin. And so in other similar coin, with a similar type of blockchain. And so it's like with money, right? Fungible. When you pay with a $20 bill, you're getting $5 back. That's the UTXO basically. Same concept, because the way it works when there's actually a transaction, you don't send the perfect amount. You send it in with the UTXOs, and then you're getting the change back. Okay, I don't code on the blockchain exactly how this works, and but that's how it works, and it's not that difficult of a concept to understand. But what you need to understand here, what's more important, is the ones which are on profit. So let's say I bought Bitcoin, right, just with cash, like maybe a year ago, and I bought it at, let's say, 10,000. Like, woohoo, right? Now it's worth 42,000. It was worth a lot more just a week ago. And that's basically that's my profit. Now this is percent of UTXOs in profit. So meaning they're looking just at all the UTXOs, basically all the Bitcoin out there, right? And they're looking at all the Bitcoin out there from each transaction, and they're looking at, after each transaction, which one of these is in profit right now, yes or no, or is in the loss, right? So it's basically so this creates it. It's a binary equation, and so it creates this oscillator that we see here. And I'm paying very close attention to this because this really caught my interest, right? I mean, this is 100% markup here. It doesn't get any higher than that, so obviously it tops out here. That's a hard ceiling. But what I was seeing here really caught my interest in that, for instance, when you look at this here and you correlate that, right, those here. See that? Right there. And I'm considering this as a medium-term signal for getting, GTFO, as they say. I mean, it doesn't work always. Like here, it's way too low. But once it hits the threshold of 95%, it becomes valuable. And, especially when it starts dancing like this reminds me of in stochastic, MACD. Remember how it becomes embedded? I mean, the fact that this gets retested here for so long while it's kind of topping out, that really was very interesting to me. And we just basically scraped it. And I didn't look at this the other day. I probably would have, do I need to look at this every day now? I really don't want to, but it might be necessary because this seems to provide value. Let's zoom all the way out. See that? Right? Let's draw a few more lines because I like lines. I'm very good at drawing lines. See that? But the thing is, you never know how deep the correction will be. I don't know if I drew this straight line, but I assume this lines up, okay? And of course, yeah. So I think this is really worth exploring. So percent of UTXOs in profit is on my radar. I'm going to pass it by Scott again in a future discussion. I'm not really one to change the system around, and that is not the purpose of a weekly system, but I might consider maybe offering another service on as an add-on or something for you swing traders. So some of you might be interested in that. So let's talk about unspent output profit ratio, right? the SOPR. That's basically, well, it's computed by dividing the realized. We talked about realized value, right? You know what that is, right? You're realizing a gain or a loss, right? And you divide that by the value at creation. So it's very similar to what we talked about previously, right? When we talked about MVRV, right? Market value, realized value. Well, in a way, right? I mean, it's basically your profit. How much are you in profit, right? It's basically a profit ratio, and you dividing the realized value in USD, okay, because you need to put some kind of number on it, and by the value at creation. And the value at creation is, of course, when this Bitcoin either was created or, well, I think it's only in this case, it's only at creation. So they don't really consider UTXOs in that respect. They really each of them. Yeah, I think each coin that's been created, each Bitcoin is being created, it was created at some point, and at that point, that's the value, and that's the one being used, right? And it creates this really beautiful oscillator, and there's a lot to be said about here. Specifically, what's important is that during bull markets, and that's actually explained in some white paper on Glassnode, which I found, well, let me not zoom in too much. Well, maybe, yeah, let's do it this way. During bull markets, you can tell the one line, right, actually acts as support. See that? Yeah, right here. Sometimes it pops below, but it always recovers back and it does retest. These are actually great buying opportunities, if you will, right? And again, it's something I might make a signal later on. Here things got a bit messy. Very hard to read, and honestly, I don't see any, But what becomes valuable after a while? Let me zoom in. Can I zoom in? Zoom like this. Yeah. Okay. So look at this. What happens during bear markets? And see that how it starts acting as resistance, and there's these two spikes that immediately are being reversed and being dragged down. I find this valuable as well, because if something spikes this high and then gets immediately dragged down below and then stays below for a day or two, I mean, these are longer periods of time, it confirms that the bear market is still going on, right? And at some point when it breaks, and it's a little bit late, but once you see all of a sudden here's a flip over, and then it becomes support again, see? And here we're dropping back below. And then what we did last year, see that? Beautiful, see that? And then we had this period more recently. Let me go out here and zoom in. There, see that? And how we were below for a while. That was, that was a bearish cycle, obviously. And now we pop back above. So right now we're actually still here. We haven't even gone below here. So it's actually quite confidence-inducing in my book. Of course, never any guarantees. Finally, the Z-score. What is the Z-score? I actually did an article on that way back. So if you're looking at the Z-score, let me draw this. Okay. So the Z-score basically is the reading, right? You have a reading, which is a value, right? And you deduct this from the mean, the mean of a data set. If you have a number, I can't write with this. I'm sorry. This means mean. And this is the standard deviation. Okay, this I can do. Divide this by the standard deviation. So that's your Z-score. Why do you do that? Well, everything in life, right, is a curve, is a kind of distribution curve. And if you will, right, you can imagine, put it sideways. Oh my God, that's horrible. Let me try this again. Yeah, I don't know how to go back, but okay. There, one more time. All right. So let's try to draw this a little bit nicer for you guys. Okay, so we were distribution curve, right? Okay, this looks like a pimple. So, and the mean is actually not here because you can tell, see how high the spike. So I didn't draw this correctly. It's probably much more. There's certain skew happening, which is probably more like this. So it's probably like more positive. I think it's negatively skewed. If this, well, no, it's actually negatively skewed because this is the plus side and this is the negative side. And not to kind of lose you here, but what I'm trying to say is that the Z-score tells us where we are here. What is the position, right? Because if you have a normalized curve, right, you have a normal, bell curve. What is one standard deviation? Well, one standard deviation is right here, right? It's basically 68%, right? Okay, 68. Sorry. And 95, right? That's 2 standard deviations, or 99 point something, right? It's basically 3 standard deviations. These are the outliers, right? So if you're going back here, this would be ranked pretty high here. See that? Wow, we're like 10. We're like 10 standard deviations out, and we're here somewhere here. This is the 1 standard deviation, right? It's when we're spending the majority of the time, right? Again, the skew there's probably a skew to it. So if we tilt this thing now sideways, it's probably going to do something like this, so like that. Okay, right? That's actually positive skew, and negative skew is this. Doesn't really matter. But what I'm trying to say here is that it gives you a ranking, it gives you a score, and I love this because it gives you an idea where are we in context of all the previous price action. Okay, and there's a case to be made that this might be a good long-term signal if you're thinking about these huge spikes at least. Right? And on the bottom as well, these are good buying opportunities. Yeah, wonderful buying opportunities. I mean, spikes below here. I mean, back up the trap, beep, 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 beep. Did you hate that? We have them all the time here in Valencia. It's horrible. That's why I'm moving. So, what I'm seeing here on a more short-term basis, right? Well, it's not really short-term, but we're quite low here. I mean, this doesn't scream to me that we're like anywhere in terms of price action and in terms of over and undervalued. That's really what it is, right? Fair value, right? Market value. That's the concept here, right? That we're talking about. And a fair value of Bitcoin right now, it's pretty low in comparison. We're somewhere on the 2 mark. So it's, there's really no need for a large scale correction, and that's why I'm kind of questioning here. But of course, it's still possible this plays out for quite a bit longer. Yeah? Very much possible. We don't know, and we just have to take a wait and see attitude about this. But it's a good signal potentially for here. There's a point to be made to saying, okay, maybe here's a good point to get out, and are you going to always nail that? Yeah, well, there's probably almost $78,000 difference. Tough. I think it's you might be better off to stick something with this. Yeah, but it's good to look at everything in correlation. I know we look just at one indicator, one measure of things. Quant trading, you always have different, or systemic trading in general, you have different alpha factors, and you combine them, you correlate them, you do all kinds of things. Slice them, dice them. All right, so back to price. Where are we? Let's go back here. Well, it's looking good. It's looking better. If this develops into a nice doji, as I said, and stays up here and closes the day, we've got how many more hours to go? Quite a few more hours to go. Almost 6 here, rounds about 8 hours more of price action. A lot can obviously happen. What we don't want to see is a candle like this. Red, right? Black, whatever color you use over there, where it closes down here. If we do that, it's almost like a 70-80% chance that we're going down here. We're doing another retest. We'll be brutal, but I'll just buy more because that's what we do. That's the core of the system, right? The core tenet of the system is to accumulate more Bitcoin. And that's all I got for today. I actually did several takes because I screwed up sometimes, and then one time it didn't get recorded. And I went outside, kicked a tree for a while, and I came back in and re-recorded. So here we are. I hope this was valuable for most of you guys. If you have questions, shoot them across the bow. I do my best. And I'll see you next time.